Good morning, everyone. Can everyone hear me, and can everyone see my screen this morning? If you would just type in a yes to let me know. Well, thank you. Today we are going to be discussing implementing planning and discipline using Nadex binary options. Now, before we get started, I do want everyone to take just a few moments to read the Nadex risk disclaimer. And basically what we want to make sure is that you understand this is an educational room. You are here to learn, and at no time should you ever trade with money you cannot afford to lose. This room is not considered to be recommending that you buy or sell any instrument. It is educational, okay? Especially this morning, because we're going to be doing some fun stuff this morning. And I want to make sure everybody understands you're here to learn. I'm your teacher for the day. Okay, now, for those of you that do not know me, my name is Gail Mercer, and I have over 15 years of trading experience. I started out with a company that basically just programmed indicators for futures and forex, and I became so enticed by the price bar I decided I wanted to trade myself. Now I specialize in price action, volume analysis, and divergence because I consider them to be leading indicators. I'm also a frequent contributor to Stocks and Commodities, Traders World, and Top Shelf. I've been a speaker at the Traders Expo, Traders World Online Expo, and at the Wyckoff Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies. That is available on Amazon or on my website. You can also contact me anytime if you have a question at gm@tradershelpdesk.com. You can visit my main site, which is tradershelpdesk.com. I have a ton of videos on my blog as well as articles on trading binary options, and you can also contact me by my phone, which is 336-263-0122. Now, let's get started with some fun activities today. Now, please notice that over on the left-hand side, the risk disclaimer is there, and it is there to make sure that you understand you are not to be trading, you're to be learning this morning. Now, I've got two charts up. One is the Wall Street 10 a.m. to noon, and one is Wall Street Daily that expires at 4:15 p.m. Now, what I would like to do is get everyone's opinion on if you were to enter the market right now, what would you do? Would you buy or would you sell? And just answer the question either way. And remember, these are not recommendations to take trades. These are training exercises, okay? So we have some people that will buy, some people that will sell. So now that you know, okay, either I'm going to buy or I'm going to sell, well, there's still a remaining question, and let's get that one up. If you enter, which type of binary option would you choose? Out of the money, at the money, or in the money? And just choose which one you would like. There's no right or wrong answer here. It's what you would choose to do. Okay? Now, since we know which direction you would go in, we know you would go whether you chose out of the money, in the money, or at the money. Now we have another decision to make, and that is, would you choose a 2-hour binary, a daily, or a weekly? And we'll give you a few more minutes to answer. Okay, we're going to close that poll out. Now, some of you will go long, some of you will go short, okay? So we're just going to select some different options that were chosen. Again, this is not trade recommendations. It is for you to learn only, okay? So we're going to do one out of the money on the 2 hour, and we're going to select 2013. We're going to buy it for $40.50 of risk. Again, this is not a trade recommendation. It is simply a practice exercise. And the price is changing on us, so we're going to amend the order so we can get in here. Well, maybe not. Okay, now some of you wanted to sell. It's just moving too fast for me, isn't it? Okay, let's cancel this order. And let's just go up to 20.025. That's one strike price out. Okay, we got in. Now, remember, some of you wanted to sell, so I'm just going to select the current price. This would be at the money, and we're going to sell that one for $56.25. Now, some of you would use a daily, so we're going to have to come over here, and we're going to have to work the daily as well. So I'm going to choose out of the money at 20.030. And place that order. And of course some of you would want to go short, so we're going to do that one. So now we have a total of 4 positions owned, okay? Now we have a short, we have a long, we have a long, we have a short. So we're going to see how these trades progress, okay? Now right now they seem to be doing pretty good over here on the 2 hour, over here on the daily. It hasn't really moved very much. Now, your questions in the future is going to be, okay, if you're losing, where are you going to exit at? And these are things I need you to start thinking about now, okay? If you're making profits, are you going to let it expire, or are you going to take profits early? These are things that you need to consider now as your trade is progressing, okay? And you can see that we have 51 minutes left on the 2 hour binary, okay? And we have 5 hours left on the daily. And right now you're out of the money. It's losing a little bit of money. Do you exit or do you wait? How long do you wait? What is a bird in the hand kind of guy, David? That's a cute answer. Oh, you're down 11 bucks. Okay? So for those that went long out of the money, you know, would you want to exit now? Or would you stay with it? You've got some profit here on 20.013. Would you take that profit and run, or would you stay in it? You know, you got to decide. This price bar is ticking away at you. Is it going to reverse on you? Could it shoot up? Take all of the money that you were risking? Could it shoot down and give you a bigger profit? Which one would it be? You know, over on the weekly, oh, you're down $10 now, man. Let's go to our open positions here. On the weekly, on this one at 20,030, that would be this one. I'm sorry, it's a daily, not a weekly. You paid $39.25 to enter that. Well, you've already lost 10 bucks. Are you going to exit now? haven't closed it yet. That's why, David. But what about over here? I mean, look at this one, 20025. Wow, you paid 33 and you've almost lost half of that. Well, you have lost half of that. Are you exiting now? Are you sticking with it? Are you trading on hope now? Now notice that the daily hasn't moved very much, okay? I don't think anybody's worried over here on the dailies. But man, this 2 hour, you're getting some heat up here. Are you going to stick with it? Are you going to exit? What are you going to do? Is it going to go against you? Okay, let me close that one. And let me put this one up now. Now this trade right here, you got $7 profit. Okay, are you going to take profit or are you going to stay with it? You almost have a profit over here. Not quite there yet, but man, over here you got a profit. Do you need to take your profit real quick? Do you see the kind of issues that you face on every trade? And yeah, I was trying to pressure you. That was my intent, to pressure you into deciding whether you would exit because you saw red here or whether you would stick with the trade, because this is what trading is all about. And even if you are making money, this is the key to trading. Even if you make the full profit potential on this sale order that we have in, can you replicate it? Okay? And that's the most important key in trading. Can you replicate your positive trades? You always feel pressure when you have money on the line. Even the most experienced trader will feel pressure. You will feel the ability to doubt what you originally thought on entry. Now remember, some of you actually on entry, what did you do? You thought that price would come up here, okay? This is the strike price that we chose. It was one strike price out, nothing great, okay? Why did you think that it would go up, okay? Type up your reasons. Why did you think this market would go up? What was your logic in your position? What made you look at the chart and say, oh, I'm going to take a long. I'm going to buy this binary option. And David, you're absolutely right. But what was it about the stochastics, about the MACD, about an RSI that would say, oh, this market's going to go up, or oh, this market's going to go down? These are trade entry rules, okay? Okay, define a while, Stefan. Is it 5 minutes? Is it an hour? Is it 2 hours? What is the definition for you for a while? And this is my point. We have to nail it down. Does everybody understand that? I saw a spike that seemed way overextended. Okay, where was the spike? Okay, was this the spike? Was this the spike? What made this spike different? And see, this is the nitty-gritty, Jacob, of the trading, okay? It's nailing down the differences between well, it's been going up for a while, and saying okay. I'm getting very specific here. If it is above 80, it is overbought. If it is below 20, it is oversold. If it very well could rest and jump up again. Okay? So what is it that would make you think that this would not just rest for a moment and then surge back up? This is what a trading plan is all about. Okay? It's defining a while. Okay? It's been moving up all morning, so it must be going down. Okay? You've got to have more definition. Okay? And this is where we're going to bring in and create a trading plan. Okay? So let me get rid of these lines on the screen and let's create an actual trading plan. Okay? Now, number one, what you want to do is analyze which setups do I really want to take. Okay? David, that is an excellent answer. You need a whole plan and system and accept some losses but limit them in the long-term stacks work out. And you're right, they do. And this is what a trading plan is all about. It was about, God, 16, 17 years ago, I went to a trade station conference, okay? And Linda Raschke was the guest speaker at this conference. And she had did a study with MIT, and they got a whole group of new students together. They wrote out a plan using nothing more than a moving average system, and they had to follow the plan. And in her study, they were actually able to make money only because they traded the plan. The plan included entries, it included exits, it included stops. Okay? Now in this case, you can see that the RSI is overbought. So the first thing that I'm going to put on here is overbought status greater than 80 on stochastics. That gives me a definition for what is overbought. Okay, oversold status is less than 20 on stochastics. Okay, I've identified now exactly what is overbought, what is a spike, okay, what is been going up for a while. What does that mean? It means that on my stochastics it's going to be above 80. Or if it's oversold or it's been going down for a while, what does that mean? It means that on my stochastics it's going to be less than 20. Does everybody understand that? Okay, now we can say long entry stochastics cannot be greater than 80. Do you see how we just defined that? Now we have to look and see, okay, what is my stochastics doing? Okay, well, it's not above 80. It's moving up to 80, but it's not at 80. Does everybody understand that? Okay, now, if you want to do a 2-hour long entry, what's the criteria? Okay, well first you have to choose a time frame. What's a good time frame that works with a 2-hour binary option? For me, it's a 15-minute chart. Okay, so we have a 15-minute chart shows. What do we want it to show? Well, we would probably want to be in an uptrend, right? What is an uptrend? Higher highs and higher lows. That is the basic definition of an uptrend, correct? So if we go back and we look at this chart, and I'm going to stretch this one out a little bit and increase the, are we making higher highs and are we making higher lows? Yes, we are. So we're in an uptrend. What is the one reason that we could not possibly take a long position? We had a reason there. It said we could not take a long position. What was the reason? Let's go back to our trading plan. Stochastics cannot be greater than 80. It was above 80 when we entered. Does everybody understand that? So now we know, okay, we really did not want to go long here because we were overextended on the stochastics. Does everybody understand? Now, what we would ideally want to do is say, okay, we have a retracement. Okay, and on this retracement, a reversal bar is formed. Okay, now let's go back and let's see if there's anywhere on here that we had a retracement that we could have entered. Okay, well that looks like a pretty good retracement, doesn't it? And then we get a reversal bar here. So this one would have met the criteria. So let's just put a little arrow here, and we're going to put it on this bar. Okay, this bar met the criteria. Do you see that? And at that particular time, the stochastics was below 80. Do you see how it lines up? It's below 80. It's a reversal bar to the upside. We're going with the trend. Okay, now what's the next thing we have to allocate for? Okay, your exit. Are you going to hold until expiration? Are you going to exit early? Or are you going to minimize your loss by exiting early? And let me clarify this one, because this would be exit early with profit, or minimize your loss by exiting early. Now, what are some rules that we could put in there? Because we don't want to trade by the seat of our pants, you know, because, you know, when you're looking at this and it's red, it's tough to stay with it, okay? You need rules. What's enough pain for you to say, it's probably not going to go in my direction. I'm going to exit early. Type in some ideas you have. This is interactive. We want to get your feedback, okay? Size of account. I think your size of account should come into play before you ever enter a trade, okay? You know, if you have, let's say, a $5,000 account, then you have to say, okay, I'm only willing to risk X amount of dollars on any trade, okay? I don't think it's something that comes in after the fact. It has to be before you enter. What's another way that we could say, hey, I'm going to exit early? Decide what you're willing to lose if the trade goes against you. Again, with binary options, that's the first question you should be asking. What am I willing to risk on this trade? Okay? Now, in one example, okay, one example of this would be, okay, we're going to hold until expiration if price moves at least one strike in our favor and stays one strike in our favor, we hold. Okay? That would be one example. All right. We could also say, well, I'm just going to hold because that's the type of trader I am. This is something that you have to decide what type of trader you are. Okay? And sometimes it's a matter of risk because, for example, if I had chosen one up here at $9, you know, I might would stick with it and just say, look, you know, I know this is not a high probability trade, but I believe it's going to move up there, so I'm not going to micromanage it. I'm just going to stay with it. But this is something that you would decide before you entered. You know, is this small enough that you're just going to say, I'm going to see what it does? Or like this one, okay, it was at the money, okay, so do we stick with it or do we hold? And that's something that we have to decide. And it's better to decide it before you ever enter, okay? Holding would have to take the remaining time frame into consideration. Are we overall in an uptrend for the next 1 or 2 hours? You could have that in your trading plan, you know. For example, let's look at this one over here on the daily. I mean, that's got another, what, 4 hours to go, right? So are you going to stay with this for the remainder of the day because you're already down 15 bucks and presume, okay, by the end of the day, it's all right, it's a retracement right now, but I think by the end of the day, it's still going to be above 20,030, okay? Or do you say, okay, this is forming a reversal bar. Well, let me get my directions back up here. And minimize your loss exiting early. Now this reversal bar tells me what? Well, it tells me that more likely than not, the next bar is going to go against me. So reversal bar forms during my trade and I'm not in the money, then take existing loss. Does everybody understand that? Now, Jacob, you said exit early when you have profit. It cannot keep going up. Okay, what is profit? Is it $2? Is it $5? Is it $10? $20? You know, and this is what you have to decide early on, okay? You know, can you stay with this? I mean, are you seeing anything right now that says this is going to go against you? Well, there's a potential for a reversal bar here, okay? Now, and this is a good example for exiting early with profits, okay? Right now, we're one strike in our favor. Do you see that? We're trading below this strike. Our strike is up here. So this is a potential reversal bar. Potential. It's a doji. Okay? Give it one more bar. Okay? If potential reversal bar forms, give one extra bar, but, okay, no less than half of profit. Okay? Now, what does that mean? That means that's a potential reversal bar, okay? And we had $25 of profit, okay? So if this starts up and starts eating my profit, then you could take a profit. Do you understand that? But now we have defined what is profit. You know, it's moved one strike in our direction. Okay? What does it say here? Okay, I'm going to hold until expiration. Oops, wrong one. This one. It is one strike in our favor, so we're going to hold till expiration. Now, does some of that depend on the time? Yeah, we have 28 minutes left on this. Okay? So now we're moving two strike prices. Okay? And we're short. How much remaining profit do we have? Well, we have $13 still available. Is it worth waiting the 30 minutes? There is a danger with taking profits too soon, and this is why I want to iterate this. Because do you see how we're typing up rules here? By typing rules up, we can measure our performance. Do you understand? How well did we follow our rules? Well, for the ones that went long, you know, we didn't follow the rules very well because we were overextended here, okay? For those that were selling, okay, we haven't written those rules up, so we can't determine, but we would have to write up rules that said, at this point, I can take a short position. Do y'all understand that? And for example, this could be as simple as, let me go back here, short 2 hour binary option. I could say trend divergence on highs in an uptrend. Reversal bar to the downside. Okay, so now not only have we defined an entry for longs, but we have also defined entries for shorts. Is everybody understanding this? And do you see how we defined, okay, we may hold until expiration on this, okay? Why? And this is the answer is the why. Why are we going to hold until expiration? Well, I mean, right now we're two strike prices in our favor. The question is always, but it could take my money. Okay? Is the price bar that is forming telling you that this market is fixing to reverse and take your profits away? Well, I would say, you know, and again, this is me with 15 years of trading experience, okay? If you're looking at this, okay, your first point of support, and I believe that price works off of support and resistance, so this is going to be your first area of potential support. It has not got there yet, okay? Here, has it got to the 20 line? No, it's not. Okay? Well, you know, on a 15-minute chart, you're making higher highs and you're making higher lows. So by the definition of uptrend, downtrend, you're still within that uptrend. Now, this is the question. Is it worth the extra $5 to stay in this market for 23 more minutes? And this, again, it is defined by your trading plan. You know, just as quickly as they come down to here, they could take it back up. Are you willing to risk $41 just to make an extra $5? So do we exit or do we stay with it? And if we exit, what is the reason for the exit? Got to have a reason. Just because we got a profit here does not mean we can exit. We got to have a rule. Okay? What is the rule? And see, this is where we need to fine tune it. Okay? Are you seeing any weakness here? I'm not seeing any weakness. Are you seeing any weakness? So, do we hold? You know, 22 minutes can seem like a lifetime. But what's the rule to exit? We're not going to trade off of emotions. We're going to trade off of rules. So what's the rule to exit? Chuck, that's a great one. If we have more than one contract, we could exit some of them, okay? But in this case, we only have one. Okay, that would be a great rule, okay? If I'm able to capture 95% of my available profits, then I can exit, okay? So now we have a new rule, okay? Here, I could say, if I manage to capture 95% of available maximum payout, I exit. Now we have defined, okay? We're not just doing it because we have, you know, $5 left. We have defined the rule set. How about rationing between potential additional profit versus profit now? You can, you know, but it has to be very well defined, Thomas, okay? When you're on the live edge of the market, you know, you're constantly saying, should I stay? Should I exit? Should I stay? Should I exit? Should I stay? Should I exit? You know, this is constantly going through your mind. Having this set of rules gives you something to say, this is what I'm going to do. You know, we could go down to a 5-minute and say, okay, do we have any reversal bars on this 5-minute? You know, is it showing me, hey, I need to exit now? You know, is there anything on this 5-minute chart that says, oh, I need to get out of this now? Well, you're overextended on the stochastics, right? Now, we're at 977. Is it possible for the Dow Jones to move right back up to 20,013 in 19 minutes? Well, if you've ever traded the Dow and it's a very volatile day, the answer would be yes. Okay? Exactly, because it's coming back to the previous low. What is the definition of an uptrend? Higher lows, higher highs. Okay? Now, if we connect these drawings, if we connect these lows here, okay, we're still making higher lows. We have not really taken out this low yet. We missed it by one tick. Do you see that? So we've missed it by one tick. So we're still making higher lows. So what would the expectation be? That it will come back and take out this high. Will it do it in 18 minutes? This is what your trading plan defines, what you're looking at, okay? At what point will you say, according to my technical analysis or according to my view of the market, this market may now go against me? Am I willing to risk this $42.50 for a remaining $4 of profit? And one, I agree with you. It's just not worth it for 18 minutes. You know, sometimes I put it into, okay, how much is this going to make me? Okay, and if we use a calculator here, and we got $4 remaining, 17 minutes. So 17 divided by 4 is going to give us 42 cents a minute. You know, is that worth waiting on? No. So I would exit. Okay? But again, this is something you have to define in your trading plan. This is where your discipline comes from. Because I can come over here and say, all right, can I exit early with profit? Oh, yeah, I can. It tells me right here I can. Do y'all see that? Because this prevents you from becoming emotional about whether you're going to remain in the trade. You know, a lot of times on the live edge, remember back when you were answering the questions and I was kind of pressuring you, should you exit, should you exit, should you exit? Okay, this is the same thing that's going to be playing out in your mind. What do you have to refer to calm you down and say, this is the way I'm going to conduct my business, because this is a business. How are you going to conduct your business? Okay, this is what the trading plan is all about. Now, most of the exits, okay, you can just copy them and put them right under the short side. Your exits are not going to change as much, with the exception of one thing. Anybody know what it is? This is a counter trend trade, okay, because you are going against the trend. You're trading a retracement within an uptrend. Does everyone understand that? So that means I might be quicker to pull the trigger to exit this trade because I'm going against my trend. So we have to compensate for that, okay? How do we compensate for that? Okay, one way is to go down to a lower time frame. Let's see, early exit with profit. You can say once price moves 2 strikes in my favor, go down to 5 minute, because we're using a 15-minute chart. Go down to 5 minute. If reversal bar forms, exit with profits. Does everybody see how I defined that now? And now we can actually, and let's put one other thing here. Let's see. Stochastics cannot be less than 20, and it shouldn't be because we were trading an uptrend. Okay. And we get a reversal bar to the downside. Okay. So now, just that quickly, we have developed a trading plan and one that we can follow. Okay. Now, let's go and let's go to, let's do a forex binary. Remember, this is for education, not for trading. Okay, we're going to go 11 a.m. to 1 p.m. All right, now, should we go long or short on here? What would your preference be according to the trading plan we just wrote up? Remember, this is for educational purposes only. Nobody's supposed to be trading here. Would we be going long or short according to the trading plan? Well, number one, right here, it says stochastics cannot be greater than 80. You're greater than 80. There is no long position. Okay? So we can potentially do a short. Okay? We have an overextended stochastics. Now, this is your problem. This is a potential reversal bar. This is an inside bar. It did not close below the low of this bar. Do you still want to go short? That's not in the trading plan. Where's the trading plan? You're not in a trend. Okay, let's see here. Let's see if we're in a trend. What is a trend? Trend is higher highs. Well, let me delete that one because it didn't do that one very good. Okay. A trend is higher highs, okay, and higher lows. So, are we in a trend? Now, that looks like it's going up to me, okay? Where's your reversal bar? These are your rules. Trend divergence on highs and uptrend, okay? We've got potential trend divergence, okay? But where's your reversal bar? There's not one. You know what that means? There's no trade. You're not replicating your trade, okay? Let's look at them. Okay? Does this look the same as this? Look how nice this reversal bar pattern is. It forms an upside down V. Okay? There's your V. This is your high. This is the low of the bar. This bar closes below it. Beautiful reversal bar. Do you see that over here? Where is that reversal bar? In fact, you had a reversal bar to the upside. That's why you need a trading plan. Because this is not the same as this trade over here that we just developed a trading plan for. Do you understand the importance of the details now? It is all about details. All about details. We defined what our entry was, and this does not meet that definition. But you're a trader. You want to enter a trade, but you're not obeying your rules, and that's how you measure your performance. Because every time you take a trade, sorry about that, that is a huge portion of it, okay? Every time I take a trade, I do a snapshot, okay? This is my snapshot. Now, on this snapshot, I'm going to put an arrow right here. This is my entry point, okay? I think we entered on that bar. Okay, this is my entry point. Okay? This is the way my trade played out. Look at my stochastics. It was doing what it needed to do. This bar did exactly what it needed to do. I can now rate myself. Did I do like I was supposed to do? Yes, I did. I get a check mark for the day. I obeyed my rules. I did my job. Even if it went against me, I did my job. Now, let's go back and measure this one. And this is how you improve your trading. It's, not going out and buying 1,000 indicators. It's the work that you do with yourself that improves your trading. Okay? Now, what have we got here? All right. Let's say you entered off of that bar. Well, that don't even look like a reversal bar, does it? Is there anybody in this room that thinks that green bar looks like a reversal bar? It doesn't. It looks like it's going to go up. Now, if you had entered, let's say on this bar, you were going to give it a chance. Well, on this bar, you better exit because that's telling you the next bar is going against you. Do you understand? Now, on your stochastics, was it correct? The stochastics was doing exactly what we thought it would do. It's overbought. But your timing is off because you didn't wait for your reversal bar. So on this one, if you took this trade, and I hope you didn't, you're going to get a big X because you did not do your job. Because remember, we already defined the job. This was the job, and you did not wait for that reversal bar to the downside. Do you understand? So if we had eliminated that one, man, we did our job and we made profit for the day. But it's because we have defined where our entries are. We have defined when we will take a profit. We have defined when we would exit early. That's what's going to make a difference. Gary, I cannot. I need that disclaimer up for this entire presentation. But I can put this over here for you. Now, the other things that I add to my trading plan is markets, okay? and the hours that I'll trade those particular markets. For example, on the indices, I actually prefer to trade the indices in the afternoon. In forex, I love trading Asia. I love trading London, and I like early morning, and typically they're on 2-hour binaries. And I do some dailies on those because we have so many dailies offered. Okay, what time frames are you going to use? Okay, I like to use a 15, a 60, and a 240. Okay, the other thing that I add, if I have 3 losing trades in a row, I'm done, because I am not in tune with my charts. Now, if I have a winning day, let's say, you know, I have 4 winners in a row, I can continue until I have 1 losing trade, and I have to decrease my contracts after 4th winning trade to half of normal trade size. Now that means, and there are days where you're just not in tune. You have an opinion. Maybe you read an article, oh man, the Dow's going to tank, and it skews your perception. Okay? If you have 3 losing trades, you have to ask yourself, am I in tune with this market? Am I in tune with what's going on? You see? You see how that was all about timing, guys? You were in too early, okay? But over here, you could have got in a lot better. You could get right here for less than $43. Is this in line with the trading plan? Yes, sir, buddy. No U.S. market at all on forex. I do some, mainly, for example, the first Friday when non-farm comes out. But a lot of times I'll just look at it because the U.S. market is so erratic at the open. That's what I mean by early morning. I'll trade usually up until about 9. And then after 9, I just let the U.S. market open. Because most of the time, you just don't know what the U.S. market's going to do. And it has the power to reverse the best of trades. Do you see how this is all about timing? The better you can be with your timing, which is handled where? It's handled right here in your trading plan. This is what defines your business. And without it, you're just pretty much throwing a dart at the screen. And you're hoping for the best. And trading on hope is not something anybody should do. Does anybody have any questions today, guys? And a lot of people do not develop a trading plan because they think it's too hard. How hard was it today, guys? It's 7 p.m. my time right now. They go to 8 p.m. during the summer, David. London, 7 a.m. No, actually, London is 3 a.m. Frankfurt opens at 2 a.m. London opens at 3 a.m. Then when we go forward in time, it would be during the summer. Basically, it's the same hours, but there's a 2-week period there where it would be 4 o'clock in the morning. See? Now, Now, don't that look just like this does? Oh, we can replicate now. Do y'all understand? This is how we replicate. Well, thank you, Sharon. Okay, I hope everyone has a great day. Give some consideration to developing your trading plan. You tweak it. You know, I've been doing this for 15 years and I still tweak mine. You know, there's little things that you pick up on every month. Tweak it, okay? But start out with it from get-go, okay? Oh, well, thank you. I hope everybody had a wonderful time. Yeah, next time we're going to show you how to use all the features of the Nadex platform. I love doing that one.